Our stock pick today is Hutchmed, stock code 0013. Hutchmed reported its oncology products achieved total market sales of $279.8 million in the first half of 2026, representing a 19.4% increase compared with the same period in 2025. Consolidated revenue came in at $278.3 million, a modest year-on-year rise of just 0.2%, primarily reflecting the group's deliberate scaling back of its low-margin prescription drug distribution business. Sales in the China market staged a strong recovery, reaching $94.4 million in the first half of 2026 and growing 32% year-on-year, driven mainly by continued improvements in the productivity of the sales team. By product, market sales of Illuminate rose 41% to $60.8 million. The company successfully secured national reimbursement drug list coverage for the combination of Illuminate with sintilimab in the second-line treatment of pMMR endometrial cancer, and also successfully renewed NRDL coverage for its existing indications in metastatic colorectal cancer patients who have previously received chemotherapy and who have previously received or are unsuitable for anti-VEGF or anti-EGFR therapy. Market sales of Sulanda increased 45% to $18.4 million, supported by an upgrade in the Chinese Society of Clinical Oncology guidelines that elevated Sulanda to the highest Class 1 recommendation for the treatment of neuroendocrine tumors, ahead of competing somatostatin analogs, as well as a marketing strategy that shifted focus toward key hospitals. Growth in Fuzakla market sales was driven mainly by markets outside the United States, where the product delivered growth of approximately 70%. This was helped by approvals or launches in 41 countries to date, including reimbursement inclusion in France in the first quarter of 2026 and launches in Portugal, Belgium, South Korea and Mexico at the end of 2025, which together lifted global market sales to $185.4 million. Consolidated revenue from oncology products rose 23% year-on-year to $121.4 million, primarily reflecting the strong market sales growth of both Illuminate and Sulanda. Other oncology immunology revenue, which includes upfront payments, regulatory milestone payments, research and development, service income, and licensing income, amounted to $40.9 million. This figure included a $18.1 million milestone payment from Eli Lilly, triggered by the approval of the second-line renal cell carcinoma indication. Other business revenue derived mainly from prescription drug distribution contributed $116 million, bringing total consolidated revenue to $278.3 million. Profit attributable to shareholders was $15.93 million, a sharp 96.5% year-on-year decline that largely reflected the inclusion in the prior year period of a one-off gain of $416 million from the disposal of the group's 45 interest in Shanghai Hutchison Pharmaceuticals. Excluding this non-comparable item, underlying operating profitability and cash flow both showed significant improvement. Operating cash flow for the first half turned from negative to positive, with a net inflow of 12.2 million yuan, an uncommon achievement among innovative drug companies. As of 30th June 2026, the group held a substantial cash and short-term investment balance of $1.375 billion, leaving it with a very strong liquidity position. Management reiterated its full-year 2026 guidance for consolidated oncology immunology revenue of between $330 million and $450 million at the results briefing, indicating a high degree of visibility into the outlook. The recommended buy-in price is $19, with a target of $21 and stop loss of $18. I do not personally hold the above stock.